Now, in our case, for Petronas, we are deemed one of the biggest buyer of insurance in the country. Okay, our premium cost to the group is quite substantial. Yeah, it's even more than the paid-up company of the local companies here in Malaysia. Okay, and then we do. If you look at his journey, I mean the flow chart just now, one of which is a feasibility study that needs to be undertaken. We undertook that study on a 10-year a period of our premium payout, premium spend. Okay, so we look at that trend, the amount of premium that we pay out to the commercial market or to the conventional insurance company, it's substantial. It's about 1 billion ringgit then, 10 years ago. The study just spanning from the year in the mid-90s to mid-2005, I think, that kind of period. We just took that period because that was the period where we have a lot of activity. Petronas was on its organic growth at that point in time. So we took that data for 10-year period, premium spend. We spent something like about 1.4 billion ringgit then. But the amount of claims that we receive, is only about 35% of that, which is basically what we're trying to say is we're just getting good money out because we manage the risk pretty well. So we know our risk. Okay, that's where the risk management comes into play at that point in time. Yeah, so we're talking about a loss ratio, which is basically premiums over claim. So meaning every dollar that we pay out, we only get back 35 cents. So there's a leakage. Yeah, you can see quite a big leakage in that sense. So that was basically the driver to that. So that is one of the compelling reasons that we said, okay, we have to do something because we have a huge premium volume, which is enough to justify for setting up a captive and looking also at our data and past claims record for just that decade, for that 10 years. So that was the initiator initially. Yeah, we are not so concerned about tax. Yeah, because if you look at historically captives in Bermuda, BVI, whatever, corporation those days, why they set up a captive is basically to look at tax. Because they go to all this tax haven country where the tax regime is much less. So it used to be the incentive initially, one of those incentives for big corporations setting up captive is to basically to minimize the tax. Yeah, but I think for us, we were not looking really on the tax issue. We're looking about the cost of the premium, which is basically our cost of risk, to the group. So that was how we went about. And then of course, next question: why Labuan? Yeah, because when we look at the various options for domicile, I think Labuan or Lofsa at that point in time, they have made some changes to the act, which allows a Malaysian registered company to apply for license, captive license. Because prior to that, it was just foreign companies that can set up captives. And when they kind of opened that up, then we decided, okay, why not use Labuan? And one of the objectives then was also to help the national objective of national interest. That was one of the reasons why we had Labuan. So, but again, I think because our model basically was just pure parent captive, meaning writing just our risk. And I think the authority has been very, very cooperative with us. Yeah, we made our case, present our case to the Labuan Risk Management Committee then, I think. And I think the approval was very, very fast. It took us less than a month actually. It's only that the signatory to sign was not available then. Yep.
Was it true?
Yeah, it's Puan Rosnahan. Just then, yeah. She was not available then because she was performing some Hajj, so there was a bit of a delay. So we put in our application in December. We got our license officially in March. Yeah, effectively we could have got it much earlier, but because the signatory was not around, and then of course you got to get the Minister of Finance to sign off the license. Yeah, that is more official. So we had our captive set up in March 2005, and we're already about 12 years old now. Okay, so that is the entire project. It was very easy and quite straightforward for us.
How much it cost? Did you, if you can, how much it
okay,
cost?
As far as the captive is concerned, the paid up capital, as Anthony mentioned, minimum paid up was 80,000 US then, which is equivalent to 300,000 ringgit. Yeah, that is the minimum paid up. But for Petronas, because our risk is huge, yeah, and our premium spend also is huge, yeah, we set up with what they call initial paid up and authorized and paid up capital of 10.5 million US. Yeah. Capital. Yeah, the captive capital. But cost-wise, it's not much. Expenses, as you rightly mentioned, yeah, is minuscule because it's being managed internally. Yeah, we do not kind of outsource it, but of course we use them because it's a requirement, Ethica Offshore. We have to have a what they call trust company, yeah, insurance manager, because we do not have warm bodies in Labuan then, so we appointed them for regulatory reporting and compliance issue. But the gist of the whole operation is drawn from the resources internally from the Petronas Group Insurance. Yeah, because we were quite fortunate in the sense that Petronas, all the insurance function is centralized. So it's easy for us to monitor all our risks, both domestically and internationally.
Percentage, how much did you save?
Put it this way, okay? How much did we save? You prevent all the leakage because you retain the risk. When you retain the risk, meaning you have your income is the premium, yeah, whatever percentage. We can safely say that, for every, we got 5 years of our premium paid out, we get 1 year free premium effectively, yeah, in terms of the savings.
And in terms of retained earnings now?
Retained earnings now, we are close to 300 million US.
Retained earnings?
That's just profits year on year.
Okay, so that gives you, I think, a better...
We can easily say for every 5 years of premium that we pay, we get 1 year free of premium by just using this particular vehicle called captive.
Is that public figure?
Yes, it is a public figure.
Okay.
That we can give you is more roughly about that figure, roughly, because it is on our annual report anyway. If you were to sort of, go to AM Best, list, it's a public information anyway. And why we apply for rating, there was an issue mentioned by Anthony in his slide, which is a good slide actually just now, the presentation, on fronting issues. Not so much fronting on as far as the local insurers in Malaysia is concerned, because we have to use a local insurer by virtue of the Insurance Act. Any assets or liabilities emanating in Malaysia, you've got to use the admitted insurer. Okay, so they will retain for whatever appetite that they have on the risk. So the balance of the risk will then be ceded to or reinsured to Energas. Yeah, then Energas then retain part of the risk. And what Energas could not retain, because we also have our own risk appetite, yeah, because we are talking about our exposure of 2 or 4 billion US any one claim, worst case scenario, yeah. So we also, in excess of our own risk appetite, we reinsure out to the retrocessionist. Yeah, it's the same flow. Yeah, the model is similar.
Actually, if I just add, I think back to this question, why this low take-up, right? I mean, you can see that even Petronas is such a sophisticated company, so to speak. It's only about 12 years old, you're captive, right?
Yeah, 12 years old.
You're talking about other centers like Bermuda, they've been around for many years. So I mean, like just now, I think it was in your chart, it says about 2.3% of the total number of captives in the world is actually from this part of the world. So then you start to ask why? Why is it so like I mentioned, Petronas, so sophisticated, only 12 years old, right? So then why is it so? Maybe it's because the amount of the level of education among the shareholders of those companies. Because from my traveling, some of these companies, they actually don't understand the concept of self-insurance. To them, self-insurance is as though, I'm taking up all this risk. But actually, that's not true. You are actually managing those risks which you think is manageable. Those that you think that you cannot manage, then you actually sit it out. So it's actually a bit more sophisticated than actually paying premiums to normal insurance companies. So I guess at the end of the day, there's a lot of education that needs to put in. Even like when I was in Osaka or Tokyo, I can't remember. There was this guy who is we do not know what's the tipping point for him to convince his shareholders, let's go and set up a captive, There's this tipping point because the shareholders are still thinking that, hey, there's something new, should I go ahead or not go ahead? So it's a matter of educating them, and that is why we are having this Asian so-called captive conference to educate all these corporations. We want to invite all these big shareholders of big companies from this part of the world to attend our conference and be educated about this concept called captives, because we have a lot of good experiences in our place.
Captive is quite a powerful risk financing tool for any big organization, because if your premium spend is a lot, which is basically the cost of risk, not just premium, there are other also aspects of the risk. Issues like deductible levels, that you have to retain. There are a lot of other components, but it is a very, very powerful risk financing tool. Now, going back to I was mentioning rated by, AM Best, why did we go for rating? Now, effectively, we have our operations elsewhere in the world, and any countries is the same, They do have their own admitted insurer. You have to go to the admitted insurer to get your risk, policy issued, and then maybe some of these countries, they are also like the Malaysian companies. They don't retain all. Okay, they have to reinsure out. And when we want them to reinsure, give it back to the captive, because that is our operation in those countries, then they will say, your reinsurer, or rather your captive, you must be rated, because you're talking about credit risk. Likewise, even in Malaysia, when we have reinsurers behind, when an insurance company have a reinsurance behind them, they will also look into rating issues. They will not accept anything less than A-, which is basically Energas guideline for that matter. Nothing less than A-, or with a minimum, or with a paid-up capital of 150 million US. Either or. And not all local insurance companies in the countries where we operate are that huge. Because we operate in all those, what we call, developing third world, or rather, frontier countries, if you like, the word to use. So although they are not developed, but when it comes to, wanting to get your risk seated back, they say, we need to see ratings. So they're pretty smart there. So hence the reason why I think we decided to apply for rating, because the fronting cost is quite expensive. That we have to pay, ranging between 5 to 10%, sometimes 15% in some countries. That's the fronting cost. So when we look at in total, the fronting cost to the captive is quite a lot. So looking at our financial situation, so we decided to go for the rating. And we know the rating costs annually is only about 200,000 Hong Kong dollars those days, but it's now in Singapore, it's about 150,000 kind of, ringgit in that sense. So we find that it is much more economical, and also by being rated, it also gives you, a good indication of the financial health of the insurance company. So that is a strong point, the rating. If you are B plus or triple B or whatever, you find a little bit jittery if the rating agency gives you that kind of a rating. So normally for any risk managers, people like me as a risk manager also, I will look at, what is your rating? That is the first, what they call, a benchmark that we use. So because if they're not properly rated, then it becomes a credit risk to you. Because in the event of a claim, they may not be able, to pay, because that's the function of the insurance company, to get the claims back paid to the clients. So if it is a strong A-rated company, and of course rating agencies have got very stringent, requirements and methodology that is being adopted before they grant you the kind of rating that they give you.
Just to give you a bit of perspective, all right? I would say that probably 90% of captives around the world are not rated. Okay, so Energas is very much at the forefront of that particular area in terms of development. I remember when there was a British Gas, were I think the first in the energy industry to get a rating, and we were all astounded. This is 20 years ago, that a captive would bother to get a credit rating. But increasingly, particularly if you're doing business in certain territories, you need it. So just bear that in mind. I would say 90% of captives are unrated, okay, because they're just taking their parents' risk, and typically in their host countries. So, Energas knows most of the major players onshore Malaysia, doesn't have a problem with rating and creditworthiness, but it's when it goes overseas and talks to, particularly in less developed markets, so that rating becomes clear. All right, so that's the first thing. Second thing is, Energas is a big captive. It's a great success story, okay? But you can start a captive if you spend $1 million of premium a year, okay? That's usually sort of a rough rule of thumb. You're spending $1 million of premium a year on your commercial insurance. This is a company. You should have a think about whether a captive, or possibly one of these lower cost variants of captives, protective cells, rent-a-captive, are appropriate for your organization. So you don't have to be as big as Petronas to have a captive, okay? It has been
So we
great
do
success.
start small initially.
Yes, but I mean, even you started with $10 million of capital, okay? You can start with 300,000 ringgit,
yes.
you know? So it's really quite small. Annual running costs, annual license fee, you've seen
small.
all of those, okay? It really can be a very low cost, very efficient risk financing tool for really quite medium-sized companies.
Yeah.
All right, so please bear that in mind as well.
So the minimum criteria for asset.
Yeah, I mean, if somebody came to me and said, Tony, should I have a captive? I say, well, look, how much do you spend on
Yeah.
premium? That's usually, and if he says more than $1 million, then I say, well, it's worth thinking about.
Yeah.
Now let's see how much over the last 10 years you've incurred in terms of claims. I mean, if every year you pay $1 million of premium and you get $5 million in claims, I'd say keep buying insurance, okay? As long as they keep
That's
charging
true.
you $1 million and paying you $5 million, I'd carry on if I were you. That sounds like a good deal to me. But if you're paying $1 million a year and you're only claiming sort of 5,000 ringgit or 10,000 ringgit, that's a huge profit. Plus, as we've already said, domestic onshore insurance companies, huge cost base. So don't forget, it's the premium versus the claims and their costs that you're picking up.
Yeah.
But yes, $1 million is a good starting point. $1 million US.
So you need to look at claim history, of course.
Yeah.
You've got to do one of these captive feasibility.
Feasibility studies. That's the first step. Yeah.
And you know, your broker will do that for you either for free or for, you know, $10,000, something like that. Okay, so that's the starting point in your captive journey.
Yeah. True.
Yeah.
Yes.